Gold's price moved higher since the beginning of the week. Today we're to discuss the fundamental challenges laid ahead for the precious metal, the Israel-Iran tensions, the recent financial releases stemming from the US, and the recent inflows into gold ETFs. Finally, we will be concluding this report with a technical analysis of gold's daily chart. Tensions between Israel and Iran remain in the spotlight for another week in a row, with both sides and their allies having moved strategic assets into the region. That being said, we should note that this is the second time this year that we have seen the two nations at blows with one another. Moreover, the most recent development is US Defense Secretary Lloyd Austin ordering on Sunday the deployment of a guided missile submarine to the Middle East, with some media outlets also claiming that the Defense Secretary has ordered the USS Abraham Lincoln aircraft carrier strike group to hasten its pace to the region. Nonetheless, at this point in time, the movement of strategic military assets into the region is mere posturing by both sides, either as a deterrent or in preparation in the event that the situation drastically deteriorates. Hence, with tensions remaining high, it may funnel safe haven inflows into the precious metal and thus aid gold's price, as it is considered to be a hedge during times of uncertainty. However, in the event of a de-escalation, it may weigh on the precious metal's price. The US PPI rates for July, which were released earlier on today, came in lower than expected, with the core PPI on a year-on-year level coming in at 2.4%, which was lower than the expected rate of 2.7% and the prior rate of 3%. Thus, the softer than expected inflation in the US producer prices may increase pressure on the Fed to cut interest rates in their September meeting as cracks begin to appear in the US economy. However, the next big test for gold traders may be the release of the US CPI rates for July on Wednesday, which are expected to showcase persistent inflationary pressures when looking at the year-on-year rate, which is anticipated to remain steady at 3%, whilst on a month-on-month basis, the CPI rate for July is expected to accelerate to 0.2% from 0.1%. Overall, should the CPI rates for July showcase persistent or even an acceleration of inflationary pressures in the US economy, the pressure on the Fed to cut interest rates in the September meeting may ease, which in turn may aid the dollar and thus weigh on gold's price given their inverse relationship with one another. However, should the CPI rates showcase easing inflationary pressures in the US economy, it may have the opposite effect and thus could potentially weigh on the dollar whilst providing support for gold's price. According to the World Gold Council, global gold ETFs saw one of their strongest months since April 2022, with gold ETFs attracting $3.7 billion in July, marking a third consecutive monthly inflow. The large amount of inflows into gold ETFs, as reported by the WGC, may have aided gold's price, and thus should demand for gold continue to increase in the coming months, it may further aid gold's price. On the flip side, should demand for gold begin to subside, it may instead weigh on the precious metal's price. Since our last report, gold's price has taken aim for our 2,470 resistance line, with the commodity's price currently testing the aforementioned resistance level. We now opt for a bullish outlook for the precious metal, and supporting our case is the RSI indicator below our chart, which currently registers a figure near 60, implying a bullish market sentiment, in addition to the upwards moving trend line, which was incepted on the 8th of August. For our bullish outlook to continue, we'd require a break above the 2,470 resistance line, with the next possible target for the bulls potentially being the 2,520 resistance level. On the flip side, for a sideways bias would require the commodity to remain confined between the sideways moving channel defined by the 2,380 support level and the 2,470 resistance line. Lastly, for a bearish outlook would require the precious metals price to clearly break below the 2,380 support line, with the next possible target for the bears being the 2,330 support level. From all of us here at Iron FX, thank you for watching.